Asian markets mostly rise to close a volatile week triggered by Chinese AI chatbot DeepSeek. And the continuing advances in AI are driving global market fluctuations. And 5 years after Brexit, shifting opinions and economic struggles may be reigniting Britain's appetite for a Bre-turn to the EU. Hello, I'm Toba Aiden with the latest business and finance news here on TRT World. Asian markets mostly rose on Friday following Wall Street's gains overnight, ending the week characterized by volatility after China's DeepSeek unveiled a groundbreaking new AI chatbot. AI-related stocks regained ground while gold prices rose to a new record high, sparked by safe haven demand amid tariff threats by US President Donald Trump. Spot gold climbed to as much as $2,798.24 before settling, and spot silver was up 2.5% at $31.56 per ounce. For more on this, we have Josh Mahoney joining us from London. He's Chief Market Analyst at Scope Markets. Good to see you, Josh. Now, DeepSeek caused quite the rattle this week. Why did it trigger such a major sell-off over on Wall Street?
Yeah, I mean, ultimately, this is talking of the potential that it's not necessarily going to be a US monopoly when it comes to AI, and also the possibility that you can do more with less. And so there's question marks about the need for people to spend hundreds of billions of dollars on AI chips and infrastructure when seemingly you can do it on a shoestring budget. That being said, if we look at the moves that we saw within the tech sector, it's not necessarily that all stocks weakened. In actual fact, we saw many companies gaining off the back of that. And the fact of the matter is, it's good news that we can see the cost of AI moving towards the downside. It benefits a select few companies that can charge a huge amount for their products or their chips. But the idea that we're going to see the cost and quality of AI moving, well, quality higher, cost lower, that's going to be good for global growth as a whole. And that's why we did see many of the markets regaining ground, despite the fact that the likes of Nvidia in particular and Microsoft, which of course has shares in OpenAI, both of those are heavily down on the week.
Now, meanwhile, US President Donald Trump announced Canada and Mexico would be facing 25% tariffs, which sent gold soaring. How concerning are these tariffs, and could we see safe haven assets rise further?
Yeah, I mean, this is something that he had previously alluded to, that he was potentially going to implement 25% tariffs on the two nations come the beginning of February. Interestingly, because they're, of course, neighbors and allies, and China are potentially only going to get 10%. But this is also notable because he's clearly pointing towards what he perceives as unfair trade relationships between these nations. But the background for this trading relationship was built under his presidency, that renegotiation of the NAFTA deal. He clearly wants to redo it again. But since that deal, we have seen the deficit with Mexico in particular intensify. Canada is largely flat. And in actual fact, if you take away the trade of energy products, Canada actually would be in deficit with the US. So there's question marks about if he wants to drive down the cost of energy, then it probably isn't the way to go. But certainly, you know, you're talking about risk haven assets, the likes of gold and the like. There's a number of different drivers of it. One of it is huge purchases in the likes of China and many of the BRICS nations. But certainly that looks to continue to be in the spotlight, considering the fact that the US is likely to continue to drive up debt. And it raises questions over when we're going to see a move lower in terms of bond yields.
Josh Mahoney, Chief Market Analyst at Scope Markets, thank you very much for joining us. Now, DeepSeek is just the latest example of the rise of innovation in China's AI sector. Analysts are saying that the US's tariffs on the country are forcing it to look for cheaper and efficient models, which has led to the growth of Chinese AI products. Emre Boz has more.
The idea was simple. The US was to set tariffs on China or to make US goods more competitive than Chinese products. That was part of Donald Trump's America First policy back in 2018. This limited Chinese firms from accessing both AI chips and semiconductor materials. Fast forward to today, and a Chinese startup has rattled the US stock market. After the release of DeepSeek's latest AI model, US tech stocks saw losses worth up to $1 trillion.
It's precisely because of these export restrictions that incentivize the Chinese firms to trying to innovate. Since given this restriction on hardware, they were trying to innovate on software, right? I mean, so that actually accelerates Chinese AI development, thanks to the export restrictions.
DeepSeek has launched an incredibly affordable model and released it using an open source approach. They've discovered a way to outpace other companies in the industry.
The Chinese firm was able to develop an open source model using less powerful AI chips and cheaper methods. But they're just one example of a company that managed to innovate given the US's restrictions. To reduce reliance on high-end chips from overseas, Chinese companies are exploring new ways in AI algorithms and training strategies. Take, for instance, China's largest e-commerce company, Alibaba. They've released their latest cloud-based AI model, the Qwen 2.5 Max. They claim the model can outperform competitors like OpenAI's ChatGPT 4.0 and Anthropic's Cloud 3.5. This sparked investor attention, pushing Alibaba's stocks up 2.8%. So what does this all mean for US tech companies? In Trump's words, it's a wake-up call.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win, because we have the greatest scientists in the world. Even Chinese leadership told me that.
For him, it's a call to action, and he hopes to jolt the sector with his massive $500 billion AI infrastructure investments, which means it's full steam ahead for the race in AI. Emre Boz, TRT World.
Let's get more on this now with Trevor Long in Sydney. He's a technology commentator and editor at EFTM. Trevor, thanks for being with us. Now, how much of a threat do you think China's new AI innovations like DeepSeek are to the US's AI dominance?
Yeah, this is a massive threat because, you know, we've only been using American AI for the most part, whether it's Google's Gemini, Microsoft's Copilot, or OpenAI's ChatGPT. And the world has been testing and playing with those. So for everyone in the world to suddenly flock to just test out a Chinese one means that we're all open to it. And I think the thing that even politicians don't appreciate is that the average person really doesn't care about all the geopolitics of China versus America. We just want products that work. So if something is useful and innovative from China, we'll use it. So I think it's a big threat.
And what new ways are Chinese companies exploring to reduce reliance on high-end chips from overseas?
Yeah, your previous reports have shown that the issue for China is the export restrictions that stop them using some of the most powerful graphics chips like NVIDIA. But I think that's very short-sighted to think that China can't and won't develop their own. It may take a couple of years, but they will definitely be working on their own chips, their own processes, as well as simply pivoting and going, right, well, let's just work out how to better and more efficiently make software that uses the existing chip technology that is in China and does it better than America. And I think it's kind of like a disruptive methodology. It's a startup methodology to say, I can't afford, in their case, they can't obtain, but a startup would say, I can't afford all these billions of dollars worth of computers. How can I do AI better at a software level? And what they've done is achieve that and therefore negate the need for the US hardware and therefore bypassing any restrictions that exist. So it's the power of the software that they seem to have absolutely nailed.
And in order to protect its monopoly, the US has been slapping tariffs on Chinese products. Do you think that is enough to protect its dominance?
Look, I think in the short term it will work because I think in the short term China will be restricted. They'll have the supply of high-end chips and processors restricted. But you've just got to remember that China is not a company that sits back and hopes that things will work out for them. They simply change the way they do things. So I believe that in 3 to 5 years, China will have the power to build the processing, to build the chips, and perhaps do it better than America. And that's the threat that America will have then is the American stuff won't have the value because the Chinese stuff will be available potentially to the rest of the world. So while it might have short-term gain, I'm not sure it's a long-term play.
Okay, Trevor Long in Sydney there for us. We'll have to leave it there. Thank you very much for joining us.
Pleasure.
Now, Friday marks 5 years since the United Kingdom formally left the European Union. Brexit, however, was not a significant factor in the UK election in July last year, which saw a Labour government return to power for the first time in 14 years. Opinions on Brexit are shifting, though, and could be setting the scene for a growing appetite in Britain for a Bre-turn to the EU. TRT World's Joel Flynn has more from London.
It was welcomed with ceremony, celebration, and even tears of joy. 5 years ago, on January 31st, 2020, Britain's 47-year membership of the European Union came to an end. It was supposed to mark the start of a country taking back control of its governance, nearly 4 years after a majority of Britons voted to leave the EU.
We're British, we've done well before we went into the Commonwealth market, and we're going to thrive. Everybody here is going to benefit from coming out.
As the country marks the 5th anniversary of the move, however, its legacy is already looking more complicated than some had promised. A report earlier this month estimated that Brexit has cost the UK economy around $175 billion US. According to the World Trade Organization, exports have fallen sharply, with British finance and transport sales hit particularly hard, while other economies have seen trade grow. Meanwhile, a key reason cited for leaving the EU by many was the number of migrants coming to the UK. In the 5 years since Brexit, migrant arrivals in Britain have repeatedly hit record levels, the vast majority from non-EU countries. All of this could partly be why British public opinion seems to be turning against Brexit.
Excuse me, has Brexit been a success, do you think?
Oh gosh, no, I don't.
Why not?
I feel like it's just caused more harm than not, really. You know, generally across a lot of things, but.
Brexit, a success or not?
Oh, no way.
No way.
No, I don't think so anyway.
Why not?
Well, I'm from Northern Ireland. Not happy how it's going over there.
Excuse me, madam, Brexit, a success or not?
Should be, but probably hasn't been.
Recent polls suggest that British voters aren't happy, including those that backed leaving the EU. According to the UK's National Centre for Social Research and a poll by YouGov, around 6 in 10 feel it's gone badly, while more than half the public now believe it was wrong to leave the EU. A poll in October last year suggested just 12% of Britons believe that Brexit has gone well. Britain's Finance Minister Rachel Reeves on Wednesday said the UK was looking at how it could reset its trade ties with the EU. European politicians have said they're open to finding new ways forward.
We as European Union had to accept this decision of our member state, the United Kingdom, to leave our family of nations. Since then, we have been working on a positive agenda with the different UK governments, and I think we have made some substantial progress.
Since the Brexit referendum in 2016, the world has changed. The COVID-19 pandemic, the war in Ukraine, and the cost of living crisis are all things that have fundamentally impacted life in this country. Increasingly, it seems, many here are beginning to wonder whether the future of Britain alone looks as bright as it might have done 5 years ago. Joel Flynn, TRT World in London.
To examine whether Brexit has lived up to the promises, Tulay Kalyon spoke to Labour MP Afzal Khan.
The cost of Brexit is a complex story. It cost the UK several prime ministers, all of whom resigned during or after Brexit, facing its challenges. Now, to look into it in details, especially in economic terms, we are joined by Mr. Afzal Khan, who is an MP for the Labour Party. Mr. Khan, thank you so much for joining us.
Thank you.
Following Brexit, many global companies left the UK. What can be done to make the UK an attractive market again?
Well, I think first thing to do is to acknowledge that the deal which had been negotiated by the Conservative Party has been a failure, and every home in Britain has in a way paying a price for it. What we need to do as a new Labour government is to look at how do we make this deal effective, because the European Union are our closest neighbours and our biggest trading partners. So it's important for both sides to ensure that this relationship works. And the Prime Minister this coming Monday will be going to Brussels to start having that discussion. I think that is important. And that would help us to reset that relationship and hopefully would help those companies who have left to come back and let us work together to grow this economy.
Yeah. And what kind of long-term plans have you got to cover the costs of Brexit?
Well, a long-term plan actually for the Labour government, the number one priority is to make sure that we invest, we grow the economy. And you see on the investment side, again, in the last 2 decades, the highest amount of investments is now going in. That surely is going to help us. We've also introduced a number of plans. You've seen today the announcement of Heathrow Airport, of other airports, because airports are big engines for the growth of the economy. You've seen the Prime Minister announcing that we want to be leading in the world on AI and the investment going into Liverpool. You've seen this Oxford and Cambridge corridor, making this the Silicon Valley of Europe. All these are ideas to help us to grow.
So you have been appointed as a trade envoy for Turkey, and Turkey has been a key trade partner for the UK, especially after Brexit. What can we expect to see in the future?
Well, look, first of all, I'm absolutely thrilled. I'm delighted to have this role. I have a long-standing relationship with Turkish people and the Turkish country. I like it. And I think Britain too has had a long-standing relationship and also equally an important relationship. Our trade already is around 26 billion. And what I would like to do is see this grow. I like to see, there's 500,000 Turkish who live in Britain. They've made Britain their home as well. So that diaspora is an amazing, strong link between Britain and Turkey. They too would have an important role to play. So I'm looking forward to working closely with both governments, strengthening this relationship, making it go deeper and wider so that it will help both countries.
For more, we're joined by Roger Casali in Florence, Italy. He's a former member of the UK Parliament for the Labour Party. Roger, it's been 5 years since the UK left the European Union. Do you think Brexit has lived up to the promise, or has it left the UK in an even worse economic situation?
It has not lived up to its promise, but I don't want to reopen the wounds of the Brexit referendum. But 5 years after Britain has left is a good moment to hold balance sheet. There were a lot of people who were in love with the idea of Brexit, and now we can have a look at the reality, and we can have a look at what has been gained and what has been lost. We know that perhaps 4% of Britain's GDP has been lost. Little has been gained. They promised that it would reduce migration, but migration has doubled. So it's hard to see what has been gained. I think it's much clearer to see what has been lost.
And polls show many Britons, even Leave voters, as you say, feel Brexit has gone badly. Is there momentum for a closer trade relationship with the European Union?
Yes, there is, and I think that's coming from 3 places. Firstly, the loss to GDP that I mentioned a moment ago, and increasing trade with the European Union would help to recover some of the lost GDP. And secondly, the relationship with the United States was supposed to be closer, particularly in relation to trade. There's no sign of that. And thirdly, the vision that Britain has, that we've just been hearing about from Azal Khan, about a new Silicon Valley for Europe, that need between Oxford and Cambridge and London and high-tech and the future will require a closer trading relationship with Europe if it's to be successful.
And there have been talks recently of the UK potentially rejoining the European Union. Do you think there is a chance for that?
Brexit was a traumatic event which divided communities, families, people across the country. I don't think there's an appetite to refight the battles of the past. This is a moment where Britons need to come together and think about their future. But certainly, as the reality of Brexit sinks in, the appetite for staying out of the European Union is falling. But I don't think there is an appetite refighting the battles of the past and going back in. I think what we will see is a gradual process of Britain getting closer to the European Union again.
Roger Casali, former MP for the UK Labour Party, thank you very much for joining us.
Thank you.
Now let's take a quick look at some of the other top business stories from around the world. Apple has reported a 4% rise in overall revenue in the first quarter, yet missed Wall Street's iPhone sales expectations with an 11% dip in sales in China. Despite the challenges, the tech giant's strong sales in apps and services helped boost its profit by 7% compared to last year. As a result, Apple shares climbed around 3% in after-hours trading, fueled by an optimistic revenue forecast for the March quarter. Meanwhile, Samsung's operating profits jumped almost 130% year-on-year in the fourth quarter, but its profit fell by a third compared to the previous quarter, dropping to $6.3 billion as the company struggled to keep up with the demand for chips used in AI servers. This follows a warning in October when Samsung acknowledged facing a crisis and raised concerns about its technological competitiveness. The US Department of Justice has moved to block Hewlett-Packard Enterprise's $14 billion acquisition of Juniper Networks, claiming the deal would reduce competition, drive up prices, and reduce innovation. This marks the first antitrust lawsuit under President Donald Trump's administration. Following the announcement, shares of both companies dropped by around 2%. And nearly 500,000 shoplifting offences were recorded by police in England and Wales last year, setting a new record. Official statistics revealed a 23% jump in offences from the previous year, with nearly 493,000 cases logged. The British Retail Consortium's annual crime survey found that thefts reported by UK retailers surged, costing businesses close to $2.5 billion. The once booming Indian stock market is now navigating turbulent times. Since September, Indian equities have been on a downward spiral. Foreign investors, long considered the backbone of India's equity markets, have been steadily pulling out their money. Over the past 4 months, they've been net sellers, with inflows almost completely drying up, plunging by a staggering 99% to just $124 million in 2024 compared to the previous year. The fallout is clear. The Nifty 50 and Sensex are now languishing at 7-month lows, firmly in connection territory since their September peaks. Even Share India Securities, a notable player, hit a 52-week low this week. This marks a stark reversal from 2023, when the Nifty 50 consistently hit record highs and outperformed the S&P 500 for much of the year. The economy isn't helping either. India's GDP growth slowed to 5.4% in the third quarter, the weakest in 7 quarters, with sectors like real estate, energy and autos the worst. The government recently lowered its growth estimate for the fiscal year ending March to 6.4%, the lowest in 4 years. But some analysts see this as a healthy correction, a chance to reset and rebuild India's growth story, they argue, remains. Domestic investors have funneled $27 billion into Indian equities since October, partially offsetting foreign outflows. Meanwhile, the Narendra Modi government will present its budget on Saturday. Various pre-budget surveys have highlighted the urgent need for job creation to tackle youth unemployment in India. The Indian gig economy could add some 90 million temporary or freelance jobs, but the industry needs a push from the government to offer better working conditions, as Smita Sharma reports.
19-year-old Sharda Devi belongs to a poor family in Khoda in Uttar Pradesh. She lost her mother last year. Her father is a construction worker. She wants to be a police officer but doesn't have the resources. After finishing high school, she is now learning to ride a scooter.
If I'm able to ride the bike well, I can be part of the delivery fleet of companies like Zomato. I will stand on my own feet and earn money and support my own needs, as well as I can take care of my family if I work.
Many young girls from marginalized communities like Sharda come to this non-profit skilling center to learn riding two-wheelers, jewelry designing, or mobile phone repairing. They are hoping to be a part of India's gig or freelance economy, which is fast growing in Tier 2 and 3 cities, with the potential to add up to 1.25% to the GDP and employ nearly 23.5 million workers by 2030.
The number of gig workers is growing in several sectors, from logistics to delivery to personal services. And so what we need to do is actually look at the overall number of a growing unorganized workforce and think about how can we extend labor protections, social security to this unorganized workforce, which includes gig workers.
21-year-old Praveen Kumar lost his job in a downsize in 2023. He was unemployed for 4 months, with 5 dependents relying on his father's meager vegetable shop. Kumar now earns around $230 a month after 10 to 12 hours of delivering orders for an e-commerce company, but hardly saves any money.
The money we make daily depends on how many orders we can deliver, maybe 5 to 10. Sometimes we don't get a single order and end up with zero earnings. The company provides insurance, but our earnings are less. This is a part-time job. I want a full-time job with a fixed income so that I don't have to struggle with money and can support my family too.
Despite its shining economic growth, the large, youthful, overworked population in India are struggling to earn regular higher wages.
While significantly different from full-time employment with added benefits for its employees, the gig economy can play a crucial role in India's future workforce by driving job creation. But companies need to create a more supportive work environment and are hoping for some incentives from the government in its upcoming budget. Smita Sharma, TRT World, New Delhi.
Well, that's all your business news for now. Thanks for watching.